3 years of investing, wiped out in just 21 days. Your finger hovers over the sell button. 3 years of consistent contributions, 36 deposits, all lost in 3 weeks. Your next 72 hours will determine your financial future. Your actions in the next 72 hours decide your wealth. Most investors choose to sell at this critical moment. The successful few don't sell. Their secret isn't intelligence, timing, or luck. It's something rarely discussed. We'll revisit that moment. To understand why most people break, we must first see their journey. You'll discover your investment level and if you have what it takes to survive the ultimate test. This moment defines your investment path for life. Level 1. $100. Your first $100 investment. You open the app multiple times, hesitating before finally pressing buy. Your brain knows this isn't just a transaction, but a fundamental switch. You transition from consuming to owning wealth. This is the crucial step every wealthy person takes. Many remember their first stock purchase vividly. On the first day, you check the app a dozen times. The numbers fluctuate, up 1.40, then down 80 cents. The small fluctuations don't matter. You just need to feel personally invested in something. $100 alone won't make you wealthy. Your next decision is key, and many get it wrong. Level 2, $500 monthly. You set up a recurring investment. Same date, same amount, same account, forever. Then, you simply forget it. The money automatically transfers from your checking account before you can spend it. No monthly decisions needed. One decision, made once, keeps working for you. Wealth accumulation becomes systematic as the market climbs. When the market crashes, your shares accumulate at lower prices. Despite headlines screaming worst time to invest, your contribution still goes through. News shifts to optimism, but your automatic contribution continues. You've stopped reacting and started executing your plan. Automated investors typically outperform those waiting for the perfect moment. This boring habit is a cornerstone of wealth. Every paycheck adds fuel to compounding growth. After 2 years, your portfolio hits $10,000, and the real test begins. Level 3, $10,000. You'd expect to feel something, but you don't. You did everything right. 2 years of contributions, never missed, never panicked, never sold. The number on your screen feels small, even embarrassing, like wasted effort. Meanwhile, your friend bought a new car. Your cousin bought a house. You watched your screen grow from $0 to $10,247 over 24 months. The math feels insulting. If you're at this level, listen closely to what comes next. The boring middle isn't a failure, it's a feature. You start questioning your choices, wondering if you picked the wrong fund. You question if trading or crypto would have been better, if you wasted money. The voice in your head sounds reasonable. That reasonable voice often precedes a mistake. 60% of investors quit here, not losing money, but faith. They cash out, convinced investing doesn't work. Years later, they see their abandoned fund achieve incredible gains. The math feels insulting. If you're at this level, listen closely to what comes next. Survive Level 3's silence, and something changes. The market presents a violent, not slow, test. How you respond determines everything. Level 4, the market crash. It drops 8% in a single day. You reassure yourself it's just a correction, a normal market event you've read about. You remain calm. By day 14, the drop accelerates, 22% down from the peak. Each news headline is more alarming than the last. Friends and family ask if you've sold. TV advisors warn this might be the start of a larger crisis. Day 21, down 40%. Your 4-year portfolio just lost 18 months of contributions. You're no longer just seeing numbers fall, you're watching your time disappear. Your finger hovers over the sell button. You open the app, finger hovering over sell. Everyone is selling, and headlines predict worse days ahead. Your spouse questions why you haven't pulled out. A calm, reasonable voice advises you to save what's left, get out. You convince yourself you can always return when the market stabilizes. This is the critical moment. The next 30 seconds are crucial for reaching level 5. 80% of investors sell during the crash, realizing permanent losses. They convert a temporary drop into a permanent loss, believing they're smart. The 20% who don't sell aren't necessarily braver. They aren't smarter or more predictive, they simply didn't react. This is the initial moment. Your finger over the CL button, portfolio down 40%, the voice urging you to save what's left. Wealthy investors don't survive the crash due to toughness. They survive because they made a crucial decision before the crash. They resolved not to sell. When the moment arrived, they simply followed their pre-made decision, without hesitation. If you don't sell, you pass the test. You've passed the test most people fail. And on the other side of that test is something you've never seen before. Level 5, $100,000. You logged in expecting a small change, but your portfolio gained more in 1 month than 6 months of contributions. Your money worked while you slept. You open a spreadsheet, projecting future growth with current contributions and market returns. The projected number in 10 years seems insane to say aloud, but the math is consistently correct. What if your investments earned more this month than your job? This is when investing transitions from theory to reality. Previously, you bet on the system. At level 5, the system finally starts betting on you. Recall that moment, your finger over sell, the panic, the voice declaring it over. The disciplined you who held created this success. Level 5 is a receipt, not a reward. You keep it private, not telling friends. You don't tell family either. Announcing $100,000 to non-investors sounds like bragging about something they don't grasp. You keep it private, letting it grow, protecting it fiercely. But $100,000 isn't the finish line. It's where a new game begins. The strategy that built this wealth will soon start working against you. Level 6, $250,000. Your previous strategy is no longer sufficient. Earlier, mistakes cost hundreds. At level 6, mistakes feel like lost years, not just monetary losses. Lost time is more costly than lost money. A single tax mistake erases 6 months of returns. Over-concentrating in the wrong sector can erase a whole year. The unseen clock ticks. You hire your first real CPA, not just software, but a professional who knows your name. Your CPA charges $4,000 but saves you $14,000 in the first year. You finally learn crucial lessons like tax loss harvesting. You learn about asset location and why investments differ across accounts. Each lesson costs what earlier knowledge would have saved. Here, most level 4 survivors lose money for a new reason. Not panic, but complacency. Comfort leads to losses. The strategy for your first $10,000 will destroy your first $1,000. Buy and hold is only for level 2. At level 6, you need allocation, rebalancing, and risk management. Investing evolves from an action to a managed system. Survive level 6, and your money starts paying you. Level 7, $3,800 lands in your account on a Tuesday. You didn't work for it. Your investments paid you. This month, next month, every month. Every month, you sit at your kitchen table. Rent, car payment, and other bills are paid automatically. Electricity, phone, groceries, all paid by your portfolio. For the first time, your investments cover all expenses. Your portfolio, not your paycheck, covers everything. You stare at your bank account. You realize you haven't touched your salary in 30 days. For the first time, your job feels optional. You don't quit, not yet. But for the first time, you truly understand that you could. The fear driving financial decisions for 2 decades subsides. Employment becomes a choice, not a survival mechanism. The moment your investments cover all your expenses, your life fundamentally splits in two. the person who needed a paycheck, and the one who doesn't. But freedom isn't the final level. There's one more level where the system treats you differently. Level 8, $1,000. Financial institutions treat you differently, proactively. Your banker knows your name. No more waiting in lines. You're escorted past the queues. The same line you stood in at level 2 with $200. Now, deals come to you, exclusive investments appearing in your inbox. You receive private placements, pre-IPO offerings, and real estate syndications. You no longer seek opportunities, they find you. At level 1, you spent hours searching for stocks. At level 8, a stranger emails you a $2,000 deal on a Tuesday morning. People treat you differently, leaning in when you speak, asking questions as if for life-changing answers. The energy in rooms shifts. You understand the shift when you recall your wealth. The system that once charged fees now waives them proactively. The same institution that put you on hold now answers instantly. Only the number next to your name has changed. Recall your finger over the sell button. The disciplined you who didn't sell opened all these new doors. At level 8, you change the market. Right now, someone else sits at their kitchen table, facing a market drop. Their portfolio is dropping, finger hovering over sell. They don't know their level, whether they'll quit or hold. They don't realize this moment is the entire game. Most quit at level 4, those who don't reach level 8. A crucial choice is being made now. If you've watched this far, you know which version of yourself you aspire to be. Will you remember this when your moment arrives? If at level 3, don't quit before level 5. Subscribe, because your next financial decision could change everything.